For years, Venezuela's oil industry has faced this fascinating and, honestly, kind of frustrating contradiction. We are talking about a nation sitting on some of the absolute most enormous petroleum reserves on the planet. Yet, actually getting that oil out of the ground? Well, that has become a massive, complicated industrial challenge. Recently, though, headlines have been totally buzzing with news that major oil field services companies are gearing up to put drilling equipment back to work. It's sparking all these rumors of a huge industry revival. But you have to ask yourself, is this the beginning of a true Venezuelan oil comeback, or are investors just getting way ahead of what the infrastructure can actually deliver? Okay, let's dive into this explainer and separate the flashy headlines from the reality on the ground. To understand where we're going, we first have to ground ourselves in exactly where we are today, which is right around 1.25 million barrels per day. That's the current Reuters estimate for Venezuela's daily oil production capacity. Now, it is incredibly important that we treat this number as a present-day snapshot of where the industry stands, rather than some guaranteed forecast of future production. Because having vast petroleum reserves sitting underground, that's really only the starting line. The big question investors are asking right now is whether this 1.25 million capacity figure can actually rise in the near future.
Section 1. Unpacking the SLB plan and the pathway to restart.
To see if that production capacity can rise, we need to shift our focus to one of the world's biggest oil field services companies, SLB. And here's the flashy headline target that is absolutely everyone talking right now: 15. SLB says it is preparing to reactivate as many as 15 drilling rigs that are already located inside Venezuela. Now, when you hear a number like that, it's super easy to assume that a massive surge in drilling is happening, overnight. But as we know, in the energy sector, intent and operational reality are often two very different things.
And here is your stark reality check. Despite that ambitious target of 15, according to Reuters, there are currently only 2 onshore drilling rigs actually operating in Venezuela. Just 2. That is a massive gap between what is physically sitting around in the country and what is actively turning dirt. A rig doesn't automatically become productive simply because it's available.
Because of that gap, we really need a more grounded, conservative estimate. Actually, scratch that. Let's look at SLB's own expectations. They figure that maybe 4 rigs could potentially be operating by the end of 2026. And even that number comes with a pretty big caveat, right? It completely assumes that all the necessary contracts are finalized, operators actually authorize the drilling, and the crews are available to do the work. So what we're really looking at here isn't a story of 15 rigs suddenly pumping oil today. It's a story of a pathway being created to carefully restart drilling activity over the next couple of years.
Section 2. Infrastructure and hidden bottlenecks in the production system.
You can bring a drilling rig back online, sure, but a rig doesn't operate in a vacuum. And this brilliantly illustrates why. Producing oil requires a complete and frankly fragile chain of events. You don't just need a drill. You need electricity to power the site. You need well services and pipelines to move the product. You need storage, you need complex processing facilities, and you need reliable transportation networks. If just one single step in this sequence breaks down or becomes a bottleneck, those barrels of oil stay trapped underground. The resource is enormous, for sure, but the production system itself is the true challenge here. Rebuilding that entire system requires navigating some really serious roadblocks. We're talking about years of infrastructure and investment deterioration. Right now, companies face major hurdles involving pending contracts, incredibly slow permit logistics, and critical power supply constraints. This is exactly why international giants like ExxonMobil and ConocoPhillips remain highly cautious. They've publicly noted their concerns involving legal protections and contract security. Remember, oil production requires massive, long-term capital. Companies aren't going to spend heavily just because crude is valuable today. They need absolute confidence that their contracts will hold, the infrastructure won't fail them, and they can safely recover their investments.
Section 3. The U.S. refinery connection and geopolitical alignment.
Now, what's really interesting about this slide is how things are shifting despite those hurdles. The wheels are definitely beginning to turn. SLB has maintained a presence in Venezuela for 97 years, which gives them this invaluable institutional knowledge of the country's oil fields. Recently, in June, they announced a long-term framework agreement with PDVSA, Venezuela's state oil company, covering everything from exploration to digital technologies. But what truly changes the economic incentives is the flow of the oil itself. On August 18th, U.S. Energy Undersecretary Kyle Housefeit stated that approximately half of Venezuela's current oil production is now being exported directly to the United States. Half! That is a highly significant international connection that completely changes the economic incentives for everyone involved.
You might be wondering, why is the U.S. taking so much of it? Well, it really comes down to chemistry.
Much of Venezuela's resource base consists of extra-heavy crude. This is highly viscous petroleum that is incredibly tough to process. It's like molasses. You can't just pump it and toss it into a standard refinery. It requires specialized production techniques and very specific refinery capabilities. As it turns out, several U.S. Gulf Coast refineries were designed specifically to process these heavier crude grades. So it's a perfect symbiotic commercial relationship. Venezuela has the extra heavy crude, U.S. refiners have the demand and the specialized capacity, and service companies like SLB have the tech to actually extract it.
Section 4. Bull versus bear case. Competing outlooks.
Let's move to and see how this builds, because we have the resources, the technology, and the buyers, but we also have that crumbling infrastructure and regulatory hurdles we talked about. Let's break down the opposing arguments here. The bull case points to a clear growth pathway. Aligned interests lead to more investment, increased drilling, more productive wells, and higher exports. In fact, U.S. Energy Secretary Chris Wright noted that U.S. refiners could still take even more Venezuelan oil. But on the flip side, the bear case reminds us that just restarting a few rigs doesn't automatically create an oil boom. If regulatory blocks persist, if the infrastructure doesn't improve fast enough to transport the oil, or if global oil prices fall substantially, which totally changes the economics of this expensive redevelopment, the whole process stalls out. For the bull case to win, multiple complex things have to go right simultaneously.
Section 5. The metric that matters. Leading indicators.
With all that complexity in mind, how do we actually cut through the noise? If you are trying to understand the reality of Venezuela's oil industry moving forward, so the crucial point is this. Don't watch the rigs, watch the barrels. A headline about 15 rigs sounds enormous and exciting, but the economic reality isn't measured in steel structures sitting in a field. The true measure is how many barrels of oil those rigs eventually help pump out of the ground and successfully transport to market. Rigs are just a headline. Actual barrel production is the reality.
To see if this services story actually transforms into a national oil boom, here is the specific checklist of metrics you must monitor. First, how many of those 15 rigs actually become operational? Second, how many new wells are actually drilled? Third, look at the speed to production, like how quickly do those wells go online. From there, you have to watch for a tangible rise in national production, followed by corresponding increases in export volume. And finally, perhaps most importantly, are there visible infrastructure improvements keeping pace to handle those new barrels? If, and literally only if, all these numbers start moving upward together, then this story becomes a highly compelling reality.
The evidence clearly shows that the rebuilding effort in Venezuela is verified and it's very real. SLB is targeting reactivations, U.S. refineries are absorbing roughly half the current output, and the frameworks for cooperation are definitely in place. But as we've seen today, the infrastructure decay didn't happen overnight, and fixing it won't either. The actual, full-scale oil boom remains to be proven. The next chapter hinges entirely on whether the barrels can follow the rigs, which leaves us with one final massive question to watch as the story develops. Can Venezuela really overcome its infrastructure bottlenecks to become a major U.S. oil supplier once again? Keep an eye on those barrels, and we will find out.